First of all, I have to say, while we always prefer markets that are rising and going up, there's a certain energy level and vigor that comes in a down market as volatility picks up. And so as a former trader, you can't help but feel that, and you felt it this morning throughout the day. But putting it into perspective, it wasn't that big of a move on percentage terms. We talked about the Dow being down 1,000 points, and it was the first 1,000-point drop since February of 2018. In February of 2018, we were talking about the fact that the Dow dropped 1,000 points and dipped below 25,000. And today we're talking about the fact that the Dow dropped 1,000 points and dipped below 28,000. So it wasn't so dramatic back in 2018 for the long term. And I think that's what we continue to see. And kind of turning to the S&P, we were down 33.5% at the lows, which is less than half of what it takes to actually trigger a market-wide circuit breaker. You have to be down 7% in the S&P 500 to trigger one of those market-wide circuit breakers. We haven't seen that since the financial crisis. So in percentage terms, it wasn't quite as significant of a down day. Certainly from a volume and messaging perspective, up 40% from normal levels just today. We were traded 10.5 billion shares in the market today, and that's a 40% increase, and even more so up on a volume perspective.
And we really saw some signs of fear in this trading today, the rush into the safe haven assets like Treasuries and gold. So if you were meeting, let's say, doing one of your meetings with private companies that were looking to exploring going public, what would you tell them if they were worried about coronavirus fears and the spread and the uncertainty in the global economy? How do you make the case?
Yeah, I think you got to focus on the long term, right? And you did mention fears, right? We saw the market sell off dramatically. There are a few things you see when that happens, and the flight to safety. We also see there are a couple things that you see from a trading perspective. You see volume move back to the exchanges, and you see volume move to ETFs. So while we talked about volumes being up, it was even more on a percentage basis in the ETF space because investors are trying to reflect their opinion much more quickly. So during slow periods, they can pick a stock that they want to invest in over the long term. When it's really a market-wide thesis, they move to ETFs to do that really quickly. But as we've seen during periods of volatility over the past few years, it's pretty short-lived. And so the IPO market can continue to be strong. And I think you'll see very quickly that after a few days, the market absorbs that news much more rapidly.
Stacey, great to see you as always. Thanks for joining us.
Always great to be here.